All right, welcome to Talk Tickers. Today we're digging into Legend Biotech, ticker LEGN, and their Q3 2025 earnings. And let me tell you, this one is a real head-scratcher for investors, a truly fascinating story. So right off the bat, you've got this wild paradox. On one side, you have just explosive growth. Their star drug, CARVYKTI, saw sales rocket up 84% year over year. That's incredible. But then, look at the other side. The market's reaction? Just brutal. The stock got hammered, hitting a new 52-week low. So what on earth is going on here? How can both of these things be true? Okay, so here's how we're going to break this all down today. First, we'll hit the Q3 numbers. Then we'll look under the hood at the CARVYKTI engine. After that, we'll dive into this disconnect between management's vision and the market's verdict. Finally, we'll give you our outlook for what's next and a potential trade idea. All right, let's jump right into section 1, the numbers. On the surface, the print looked pretty good, but once you start peeling back the layers, a much more complicated story emerges.
So, first up, let's talk about the good stuff, the bottom line. The company reported a GAAP EPS loss of 11 cents. Now, that was actually a 2-cent beat versus what the street was looking for. So, a nice little win for the bulls right there.
But, and this is a big but, here's the catch. The top line, their revenue, came in just a hair under expectations. We're talking less than a 1% miss, which sounds like nothing, right? Wrong. In this kind of market, even the tiniest hint of a slowdown can get absolutely punished. And this table, it really lays out that tension perfectly. You see that tiny revenue miss? It's sitting right next to this jaw-dropping 70% year-over-year growth. And what's driving it all? Well, that's the real story. Look at CARVYKTI's net sales, $524 million. That's up 84%. It's clear the operational machine here is an absolute beast, just firing on all cylinders. Okay, so let's pop the hood and take a closer look at that engine. Because let's be crystal clear, the entire story for Legend right now is CARVYKTI. Everything hinges on the success of this one CAR-T therapy. And just listen to the ambition coming from the top. The CEO, Ying Huang, isn't just talking about a better treatment. He said, we're now changing that standard to curative potential. Curative potential. That's not just a small step up. That's a whole new ballgame. This is the foundation of their super bullish long-term story they're telling Wall Street. And you know what? The numbers are there to back up the hype. Out of that $524 million in sales this quarter, the US is the clear heavyweight, bringing in about 3/4 of the total. But check this out. The growth outside the US is just exploding. It's up nearly 5 times what it was a year ago. That's some serious acceleration. So with all this demand, how are they going to keep up? Well, management has laid out a pretty clear roadmap. They're expanding their US facility in Raritan. They just got their new site in Belgium up and running, and they're aiming for a capacity of 10,000 doses a year by the end of 2025. And the end goal? Doubling that to 20,000. They're definitely planning for growth. Which brings us right back to that big nagging question. You've got incredible growth, you've got a clear plan to scale, so why in the world isn't Wall Street buying it? Let's really dig into this massive disconnect between the company's story and the stock price. On the earnings call, management painted a really rosy picture. They're guiding for CARVYKTI to be profitable by the end of 2025 and for the entire company to be in the black in 2026. They've got a cool $1 billion in cash, so no worries there. They're seeing progress in their pipeline, and they kept hammering this one point home. CARVYKTI is the only second-line therapy that has a proven overall survival benefit right there on the label. That's a huge deal. Okay, but here it is. This is the massive storm cloud hanging over this entire story. The FDA boxed warning. For anyone who doesn't know, this is the most severe warning the FDA can put on a drug. It's a big black box right on the label. And this one, for a serious GI toxicity, was added just last month. For investors, this creates a huge safety overhang. It's the kind of thing that makes them second-guess even the most spectacular growth numbers. And if you want to see the market's verdict in one picture, this is it. It's a tale of 2 completely different tapes. The broader biotech sector, which we're tracking here with the XBI ETF, is having a fantastic year. It's up 25%. And Legend, it's down 35%. So you can't blame this on the sector. This is absolutely a company-specific issue. The market is pricing in risk for Legend and Legend alone. So, after weighing all of that, the good, the bad, and the ugly, what's our take on what happens next? let's get into our outlook and our rating. Looking ahead to Q4, the Wall Street consensus is calling for about $310 million in revenue. And honestly, based on their trajectory, that seems totally achievable. But here's the thing. The fundamentals might not even matter right now. This stock is trading purely on sentiment and fear, not on sales figures. And because of that sentiment-driven trading, you should absolutely expect the volatility to continue. This stock is stuck in a downtrend, and it's going to need a real catalyst to break free. And I don't just mean another great sales quarter. It needs something big, like data that addresses the safety concerns or a major win from their pipeline. Because right now, the market is just plugging its ears to the fantastic growth story. So, where does that leave us? Given this deep conflict between stellar fundamentals on one side and this massive risk on the other, we're slapping a market perform rating on the stock. We just think it's going to be stuck in the mud, likely trading in line with the market until we get some real clarity on that safety issue.
All right, last but not least, let's talk about the trade. Based on everything we've just laid out, is there a way to play this? We think there might be. Here's an idea for you.
So, what's the actual trade? How do you play this huge gap between a single struggling stock and a sector that's on fire? Well, the idea is what we call a performance divergence pairs trade. It's a strategy that's tailor-made for a situation just like this. Here's how it works. You go long the biotech sector. You buy the XBI ETF to ride that broader rally. At the same time, you short Legend Biotech stock. See what that does? It lets you capture the tailwind of the whole sector while hedging yourself against the very specific risks, the safety overhang, that are dragging LEGN down. You're basically making a bet that the huge performance gap we showed you earlier is going to stick around or even get wider. And that's our complete debrief of Legend Biotech's very complicated quarter. And of course, a reminder that this is not financial advice.